Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in here on SPY. So we are pulling back with increased volume. It's definitely starting to take our attention, but we haven't filled the gap yet. 274.24. We are about to test these moving average supports, and we know anything above 270.20 is a higher low. So it's more of a pullback than the bulls would like to see, but still no overall red flags to the longer term trend where we have our low of the dump, high, higher low, higher high. And really the must-hold level is down at 264.82, so there's a lot of space between the must-hold level. This is just the ideal little higher low that the bulls will maintain. So we are seeing a pullback. There is some decent bear opportunity short-term, but as far as the trend breaking or the bears about to take over, there's no real sign of that at this point. We are going to be watching the tightening Bollinger Bands because the Bollinger Bands did keep the bulls from seeing a break to continuation with multiple rejections from that level. And it's tightening. You can see it's not ascending and creating room to the upside because of this pullback. It's coming down with the price. So that is going to be in the way, and it's something we're going to be monitoring from here on out. SPY on the weekly time frame, still riding up the middle Bollinger Band support, and at this point, it would take a clear break below that level for the bears to take back control. And again, 264.82 is the must-hold level. That would be a clear bear break if it does occur. I am still watching the 10-year Treasury yield. The 10-year Treasury yield is in a potential weekly bull flag, and it pretty much correlates with this week of bounce, or I should say this month of bounce that we've seen on SPY, with the month of healthy pullback on the Treasury yield. So if we do get the bulls showing up in the Treasury yield and head to 3% and then 3.04, the two major levels that I'm watching, those are going to potentially be a catalyst that we could see the market bears take over. We have, and by take over, I just mean head back down to our support levels. We have the FOMC next week to be watching as well, another potential catalyst. So some things on the horizon to be keeping an eye out for. But again, for me, just to keep it nice and simple, this daily level, as long as this level holds, there's no major red flags. If that level breaks, absolutely a major red flag for the bulls overall. Checking the Dow has been the weaker of the markets, and it's in a beautiful equilibrium pattern. All-time high, low of the dump, lower high, higher low, lower high, and the bulls are trying to form a higher low compared to 24,217. So the range that I'm watching is that low and resistance of 25,449. That's the range. We're currently right in the middle of it right now, and a break of this will potentially be a little bit of insight into the other markets. I don't think that it's going to drag all the other markets down. It could, but it's going to be very clear when this level does break. And depending on the setup for the other markets, when that happens, it's going to give us some good information as well. So this is likely to happen. The way this is setting up, it's probably going to be shaping up to be happening right around the FOMC mid next week. Weekly time frame here, not as strong. You can see we're grinding this middle Bollinger Band support. We're getting tight, and we could very easily see another leg down here on the Dow. So something to be keeping an eye on. IWM is the strongest and did get right up to that all-time high and did get a new all-time high, 160.63. We got up to 160. I take that back, actually. We missed it. It's a double top at this point. I was under the impression that we broke it by a couple pennies. We actually rejected by about 30 cents. So that's notable. That's a top fishing play where you could go bearish on IWM and exit if we see a new all-time high. And at this point, we're pulling back. It's a very healthy pullback, a potential bull flag as long as these exponential moving averages hold. And it would require a daily lower high and then a lower low to shift momentum back in control of the bears. So there are, this consolidation right now is something we're paying attention to, but for me, it's nothing that is anything more than just normal healthy consolidation after the bull move that we have been seeing over last week. IWM on the weekly time frame, so there's that double top and could be headed back down towards this middle Bollinger Band support. The VIX here is starting to see a little bit of bullish action, trying to hold this $15 psychological support level. 1759 and 2049 are two resistances that I'm keeping an eye on. Middle Bollinger Band rejected the last bounce attempt. That level is coming up as well, and the bulls have a ways to go to change this daily trend back in their favor. Weekly time frame inside bar, pretty much a sure thing this week, and we'll watch for the direction that the inside bar breaks next week. So all in all, I'm watching the Treasury yield. I'm watching the tech sector for key insight into the S&P 500. In my opinion, the tech sector is running the show, and once we see weakness in the leaders, Amazon, Apple, and Netflix seeing a little bit of weakness with that short attack, but Once those names see some decent weakness on the daily time frame, that's the only hope that the market bears have for seeing a pullback back down to some key support levels, in my opinion. So those are the things that we're going to be watching for. Increasing bear volume is catching my eye. If we didn't have increasing bear volume, I would say this is nothing. This is bulls in full control. But because it is increasing, that does have me a little bit more attentive. So we'll keep checking in on it the next couple days. We'll see the setup as we head into the FOMC next week. And again, keep an eye on Dow and this very clear equilibrium pattern. I appreciate you watching, and we'll keep checking back in. See you tomorrow.